Okay, welcome to Crushing It. I'm your host, John Trimble, and this is where risk meets opportunity. Today's guest is someone I'm really excited to talk about. He operates at the intersection of insurance, analytics, and entrepreneurship. Samil Jain has spent more than 25 years in the insurance industry. He's worked with major carriers and helped insurance startups, insurtech startups, and emerging MGAs to build products that actually work. He's a credentialed actuary, Wharton MBA, and a consulting advisor who specializes in pricing strategy, filings, capacity, and analytics. Well, what makes Samil unique is he just doesn't measure risk. He helps founders turn it into a business. And if you've seen his thoughts on LinkedIn about topics about risk capacity and MGA carrier fit, you know, he makes the complex practical, which is always a very challenging thing to do. Samil, welcome to Crushing It.
Glad to be here, John.
So Samil, you've worked with global carriers and early stage founders. What's the biggest misconception you see about risk when people are entering the risk space?
Honestly, the biggest misconception I see comes from people that think insurance is one large market. So you'll have people that use an example of people coming from outside of the US, but it holds just as well for people within the US that say, hey, we want to be in the US market. We want to start a new insurance MGA here. And I ask them why. It's like, it's the biggest market. And what I have to kind of constantly remind people is that the US is not one big market. It's actually 55 smaller markets, right? That's because insurance is regulated at the individual state level. And that's really where a lot of the details come into play.
What area do you see is the biggest area of when we talked a little about MGAs? Is that still a big growth area?
Absolutely. MGAs is one of the biggest growing areas. And just to kind of define that a little bit, it stands for Managing General Agent. And the idea there is really the best way to think about that is it's a mini version of an insurance company. In order for somebody to start an insurance company, it requires a really big infusion of capital, orders of magnitude 20-25 million before you can write your first policy. Not everybody has that kind of cash sitting around. Even as a startup, if you're raising capital, you don't want to put your first 25 million just kind of sitting there as surplus, right? So that's where this MGA concept comes into play, where you can effectively do a lot of the things that a new insurance program would require. You can underwrite, you can risk policies, you can come up with a rating algorithm, you can come up with the right approach to marketing, to selling the product, to all of that, right? Even define the coverages. And instead of you having to put that surplus, it's an insurance carrier called a fronting carrier that does that part for you. So you kind of get to have a lot of the flexibility of a startup while having a lot of the capital required of kind of insurance industry be handled by somebody else. And that's kind of what's allowed a lot of innovation in this space.
Yeah, I can imagine that it's challenging enough to do fundraising as it is, and that to tell an investor, well, we're going to put our first 25 million into a pool to cover risk. It's hardly an attractive investment. So I can see where that model is really necessary to get started in the insurance space.
Absolutely. And it also serves as a kind of proof of concept for both sides, right? So the proof of concept for the investors. They want to make sure that this is going to become something before they put a really big investment in place. And it also serves as a proof of concept for the insurance industry to make sure the people kind of setting up that MGA know what they're doing. They can actually follow all the regulation and get a product in market.
So what are some interesting areas that you've seen MGAs move into?
One of the biggest areas of growth within the MGA space is what's called excess and surplus lines. And what that means is, so like, as I mentioned, insurance is regulated at the state level, and individual states kind of say, hey, here's how you can charge for insurance. Here's what you can price for. Here's what you cannot price for. For example, if you're thinking about something as straightforward as your personal auto policy, you would think that, you know, your prior driving history is going to factor into how much premium you pay. If you've been a very clean driver, you're low risk, you should pay less. If you've had multiple accidents, multiple tickets, you're a higher risk driver, you'll pay more, right? So that kind of makes sense. Where that falls apart is if you have somebody who is, let's say, a very high risk driver, nobody wants to write them. Or if you live in an area, California, Florida, that is inundated with catastrophic risk or other things that make it very challenging for insurers to be able to accept that risk. The standard markets, which is called the admitted markets, are not a good place for that kind of risk. Like, there is no good space that makes it easy to write that. And another example is if you're trying to create a new product. I worked on several new products right now, and regulators don't have a good sense of how to even account for pricing because they've never seen something like that before. They don't want to kill innovation, put a kibosh on a product before it even started because they don't know how to regulate the prices. So they've kind of created this very separate market called excess and surplus lines that allows for these new innovative products to be created and to be sold in a very heavily regulated market. That space, and it's still very broad because you can have, property products, you can have casualty products, you can have life and health products, you can still have a wide range of insurance products, but kind of outside of this norm a little bit. So sometimes these can be niche products, other times this can be pretty big markets. They are just currently underserved.
Yeah. So we talked a little bit about you have an expertise and background in measuring risk. What are those areas that are hardest for insurance companies to really understand what the actual risk is?
Yeah, I mean, we love our data, right? So we like to look back and use that historical experience data and use that to make a bunch of adjustments to it, and then use that to project what things are going to look like in the future. When we don't have historical data, that's when we kind of get into trouble, right? That's when we kind of look around and say, well, how do I price this? I can give you a few examples without sharing too much, but there are clients I have that are creating some very new and unique products. Some of it is clean energy. There's a lot of advancement in clean energy that we don't have enough historical data to look back and say, here's the kind of losses that could happen. As an example, I'll use cyber insurance, right? 10 years ago, people had no idea really what the kinds of magnitudes of things could be covered. It was there, the insurance programs existed, but they kind of didn't really know what kinds of risks could emerge. When COVID hit, insurance market went just wild because everybody was working from home. None of the standard protocols that companies put in place to make sure employees aren't kind of stepping out of bounds they were all being violated, and there was just a massive amount of cyber phishing and malware attacks that happened once a lot of people started working from home, and that really exposed that market. So that's the kind of thing. So when events like that happen that haven't been tested before, as are a lot of our standard methods that we use as actuaries kind of go out the window. And that's when you have to say, hey, this does not work anymore because my prior history is no longer going to represent what the current market environment looks like and what it might look like in the future. Even outside of cyber, the kinds of inflation that happened after COVID on auto parts, on lumber, right? There was unforeseen kinds of numbers. So when that happens, we don't really have easy ways of accounting for that. So that's when you kind of, as an actuary, need to be creative and really thoughtful about, hey, what can I do here? I don't want to just throw my arms up in the air and say, sorry, can't do it, right? That's not a good solution. So that's when we have to be creative and we have to think about, what can I use? Can I use some proxies here? Can I look at when did some event similar to this happen in the past, and what do we learn from that, and how can I use that information?
Yeah, obviously, I mean, I find cyber insurance particularly interesting. When they first came out with the cyber insurance policies, back, before COVID, like 2010s, 15s, they couldn't give it away because no one was really interested. It's fairly cheap, and they wrote in all these, no one was buying it, so they added additional features into it.
Yep.
And then with that spike of cybercrime during COVID, they really kind of got sideways, and their response to that has been really to kind of close those loopholes or write it in a policy where it becomes more difficult or more preventative as far as paying out, and from the insurance carrier's perspective, correct?
Yeah. I mean, there's definitely truth to that. You want to be able to quantify and contain the exposures as much. It can't be zero though, right? Because then what are you covering in the end? So you have to find this space that is well defined or defined enough that you can say, hey, I can quantify this. I can put some sort of bounds around this. You can never expect it to be completely predictable, because if that was the case, it would no longer be insurance, right? We are in the business of taking risk, right? By definition, the insurance carrier is transferring the risk from the policyholder to themselves. We know there's going to be a risk. It's just that when the law of large number kicks in, you can better predict the risk in a bigger homogeneous cohort than you could do for one individual. And that's really where this comes into play. The market's always going to be evolving. I guess we could get into things like, what is the What does AI look like, right? Because that's a wild space right now. That's going to change every industry, including insurance, in many different ways. Autonomous cars, what does that do for insurance? Like, whose liability is that when autonomous car hits something or somebody? Machines that are basically robots at this point that are doing things. Whose liability is that, right? And it's a constantly shifting space there. So those are some of the areas where a lot of exciting things happening.
Yeah, well, it doesn't take long for the to shift to AI nowadays because it kind of dominates what's on everyone's mind. But like just touching on like insuring a self-driving car,
Sure.
you say there's the who's responsible and how's that been breaking down in some of these accidents? Because you have like the owner of the vehicle, you have the company that operates it, you have people that design the software. So how does that work?
Yeah, it's going to be really, really interesting. This is not a answer that the industry has figured out yet. We do expect that there's going to be some transfer of risk from individuals over, which is, hey, if I'm driving my car today and it is not an autonomous vehicle, I am driving it. It's my liability, right? We're let's slowly move towards autonomous vehicles, right? Let's first kind of get into this gray area where I'm making up things. Let's say my cars right now, they'll break themselves, right?
Mm-hmm.
When you get too close, they want to avoid that accident. They want to break themselves. Or if you're turning and there's another car, or you're shifting lanes, there's another car in the lane next to you. 10 years ago, they started flashing lights. Now they won't even let you turn if they see something in there, right? What if that doesn't work? Or what if there's a wrong signal there? Or what if that causes a different accident, causes you to crash because it didn't operate? Well, whose fault is that, right? That's a very gray area right now. And
Mm-hmm.
the way a lot of this is going to emerge is that it's going to be eventually decided by case law when some of these accidents happen and they go to court. Now there's pretty few and fine between that they are being addressed kind of by on a one-off basis, but I think we are going to get into a world where this is going to become a bigger topic and either a court in one of the bellwether states, the Supreme Court, or somebody is going to kind of take on a view in a situation like that, whose liability is, and it's not going to be straightforward because there's a lot of gray here, right? What if, well, you could kind of call it, I'm making this up, you could call it the car's fault, but what if I should still have had my hands on the wheel and overridden what the car did, right?
Right.
That's still my liability, right? I can't just have my hands up in the air and expect the car to break itself. If it doesn't, I should still be stepping in. At least that's the world we're in today. We're moving away from that pretty quickly, but that's the world we're still in today, right? So this is going to evolve rapidly. A lot of times courts will also look at, well, there may be a difference between if I hit another car or if I hit another person, right? They may have different expectations there. Or if I hit property, they may have different expectations. Property is not expected to move out of the way. Maybe another car is, right? So these are the kind of things that are going to get pretty interesting. And a lot of the times, have you heard of the trolley problem?
No.
Okay. Oh, this is brilliant, right? So this is not new. This has been around for decades. It's the old school approach that, hey, you're going down a track on a railway carriage, and you see, let me get this right, you see four workers lying down on the track in front of you. If nothing happens, you're going to hit and potentially hurt or kill these four people. There's a person in front that has the ability to switch tracks. They can switch the trolley to go on this alternate path B that only has one person laying down on that track. Should this person make a moral decision to change the course of this trolley so that it only hurts one person instead of four, right? And you can kind of take that idea and you can say, hey, sure, sounds better. Right? Don't save the lives of those four people. But yes, you are taking the life of this one person. Does that person feel the same way? Right? Somebody is making the action now. And then people take that idea and really build that out into, what if those four people are criminals and that one person is not? What if those four people are elderly and that one person is young and has a longer lifespan ahead of them? What if those four people are sick and this one person is not, right? And so people have taken this idea and turned this into a morality question. One thing that really interesting that emerged out of that is different cultures have different views on that.
Yeah.
There are some cultures that'll say, yeah, I would rather value the life of a younger person than an older person. There's other cultures where that's flipped around and they say, no, we want to value the life of these older people that have spent their whole life helping or doing something versus one person that you don't know about, right? People have thought about, well, what if it's animals versus a person? So you can kind of really take that idea. And one thing that became very clear after running this trolley problem multiple times, multiple cultures, multiple groups, was that it's not always the same answer. So if I am the person that's kind of programming this autonomous vehicle to make that decision versus if you are programming it, we could end up in two different places.
Yeah. Yeah.
So now whose liability is that when something happens, right? So you kind of get into this really nebulous space where this is really undefined.
No, and I can imagine where AI models, like we go back to the car, could behave differently depending on where they are. Like a car in America may drive differently than a car in Russia or Germany.
But what if it's a Russian or German driver in America? Right. So this is a very complex problem.
Yeah.
But it's important one. That's the direction we're heading it. So it has to be answered at some point, right?
Well, I imagine there's just going to be different answers depending on where you're at. I'm sure that, like the Supreme Court will make a decision.
But what if the chips are all made in one country?
Yeah, it does get complicated.
It gets so interesting. There's so many layers to it, you can kind of keep going down the path. But that's where, and this answer is going to evolve, and that's where insurance has to evolve,
right?
Because the liability risk could shift from time to time, country to country, generation to generation, and those are the things that we have to stay on top of it in the insurance space.
That's what kind of strikes me that's so complex in insurance now is it gets down into these very in the weeds details that determines the risk or has to be looked at to have an accurate risk picture, whether it's AI or cybersecurity, but you start talking about where'd the chips come from or who programmed it or what is the, moral impetus behind the company that programmed it.
Yep.
And those are really, it's information that's difficult to quantify. And then it's also information that's difficult to find. And then that one piece of information isn't the entire risk picture. It's just part of it. And like, how does it correlate with all these other variables that you may be trying to get in as well? So I'm going to jump. So like with that, all that complexity, is AI helping solve this problem as well as creating it?
Yes and yes. Right. It's helping solve because we now have access to data and resources like never before. Right. So if I want to understand what's the scope of this problem or what's been done, what information do I have available, I can find better tools today that are more efficient at getting that information to me than ever before, partly because of AI. Right. Take a simpler example. If I want to underwrite a house, I can now layer in, what is the fire risk? How close is it to the nearest house? What's the wildfire risk around it because of something called WEED, which is a wildfire urban interface. I can look at that. I can understand, is there a sinkhole here? Because we can look at images from well before. This is where AI is helping tremendously, right? Mm-hmm. If there is a wildfire, we can better understand, hey, what's the likelihood it's going to get to a certain place because we have aerial imagery from satellites that's tracking these on a very regular basis. So we have more data, more technology, more tools, AI or otherwise, than ever before. So we have an immense amount of knowledge and data to be able to do this. But now to the second part of the yes, AI is creating risks of itself now. And there's actually several startups that are starting to do things like create AI insurance, not AI-based insurance, not insurance solution based on AI technology. No, but this is a solution for AI itself because AI is going to make mistakes and get things wrong. And what are the consequences on that? And who's responsible for that? Who takes the risk on those things, right? If AI tells you to do something, you act on it, and that causes a huge financial loss to you, do you sue AI or how does that work, right? So those are the areas where there's a whole new line of business essentially that's coming out for AI insurance in particular. So that's the second yes there is that, yeah, it's both creating a lot of solutions, but it's also creating opportunity for new insurance to begin with. And there's a whole host of new areas that we don't have enough data. Like we were talking about earlier, this is one of those examples. We don't have enough data. Doesn't mean we kind of give up. Instead, we say, okay, we've done things like this before. We have created programs. Doesn't mean we were perfect, but we've created programs where we had insufficient data. What do we do there? What can we do now that's comparable using all the new information we have here?
Yeah. So as AI matures, everyone's familiar with, the generative AI, ChatGPT
Sure.
and Gemini and kind of using it in those areas. It seems like it's really made marketing, for example, easier, but like businesses are looking at how to use AI to make their processes more streamlined, make better decisions faster. That's really the kind of the drive. So we're kind of moving into agentic
Yeah.
AI, where AI makes those decisions. We're kind of at a point where a lot of businesses are finding those projects are failing. Have you seen that in certain areas, or what are your thoughts
All
on
the
that?
time, all the time. So one of the biggest things that I work on is creating new insurance programs, like you had mentioned at the beginning of the call. When I was doing this 5 years ago, people would be like, "Hey, here's what we are doing. Can you help us build a program for this?" Now I have a couple of clients where it starts with, "Hey, I've already built out a program, so I don't necessarily need your help." I'm like, "Okay," and they'll say, "Hey, but the capacity provider still wants an actuary to sign off on this. Can you sign off on it?" And I was like, "Well, I need to take a look at it before I can sign off on it." And when I started reviewing it, I'm going to ask them the question, like, how did you build this? And they said, "Oh, I use AI." And I started asking them questions, and there's so much nonsense that comes out of these AI results today
Mm-hmm.
because it's not fine-tuned for this level of insurance depth of knowledge or actual depth of knowledge. It's just not there today. Doesn't mean it's not going to get there. It 100% is going to get there, but it's not there today. So what I am seeing right now, a lot of times when people are using AI, is if they are using it as a source of information and then using that to build something, that's usually pretty efficient, pretty fast, because they're getting that information a lot faster.
Right.
On the other hand, if they are asking AI to just build it and they're using that as their final version of the model, it's pretty much nonsense at this point, because it doesn't have the nuance to be able to understand the level of detail. It'll pull frequency and severity and all this other information from disparate sources, and it just doesn't make sense. And it's a complete Frankenstein monster that makes no sense whatsoever. And that's where I have the conversation with people saying, "Please don't bring this to your capacity providers, because they'll never talk to you again. Let's go through and understand what's going on here. And then either you make this model or I'll make it for you, but please don't share this, because this is not going to do you any favors. Let's talk about what's going on here," right? So we are absolutely in that place where there are a lot of efficiencies and advantages to be gained from using AI. But if you're using it as the end result, that's not in a good place today.
Yeah, I think, things when people ask about AI security, there's probably two things that are like the most critical for companies to follow when they're doing that. Is one is, making sure that you're aware of where that information is going. Like if your employees are making queries, and where are those queries going? Where are the responses being stored? Are they being put out there for everyone else to use? So, especially if they're using PII, that's kind of like that data leakage that can get
Yep.
companies in trouble. And the other thing is making sure that people review the output of the AI, not just using it as a final product. I came across one example where someone just used AI to write an intro script in front of a large audience, got that information from LinkedIn. Well, it got the wrong LinkedIn profile with a different name. So they're looking like complete fools in front of an audience of hundreds of people. And it's simply because they didn't check the work and make sure and verify it, and that it can give I liken it to a very helpful friend who always has the answer, but will not admit that they don't know. They can't say, "I don't know."
And it's evolving, right? This is ChatGPT is what, 3 years old as of yesterday or something like that, right? So this is it's come a long way in these
Hmm.
last 3 years, but it's still an infant compared to where it's going to be. So I studied AI. I actually studied AI at a university in 98, 99. That was my first introduction. So right, that was already, we're looking at 27 years ago,
Right.
and it was what was then called AI is what I would today deem as data science or machine learning models. Like that was basic algorithms we were learning. It was like statistical models on crack, if you may, and they were wonderful. They did a lot of great things. And it was kind of starting to touch into, hey, this generative piece. Can we actually create things with this? Can we get in that place? And we were getting there. It was never meant to be used as a GLM, as like this true like a like a true like general purpose technology like the chat GPT things are today, right? That was not the intention back then. It was still like, hey, these are very specific fine-tuned models that we're going to build to do one particular task, and that's it. When you come into this world of LLMs or GPTs, that's a whole other world, because you need to have so much information that goes into understanding human language and to produce something out in human language, and to be able to draw and to be able to create and to be able to truly generate ideas. That's a whole other level. And to the complexity that goes into these systems is pretty wild.
Yeah. So what do you think the greatest threat from AI is now?
People using AI without understanding what they're using.
Mm-hmm.
We are used to, or we want it to do the work for us.
Right.
People want AI to just be the answer and just give you the right answer and just do it.
Yeah. There's that general, just push the button and let me do. Everyone has that tendency.
Push the easy button and you're done with it, right?
Right.
It's not there yet. And maybe in some specific instances it is. And I think that's where I see it moving in that direction more, where it's going to start taking on slightly more specific, purposeful tasks, as opposed to really being a true general purpose technology. And I think it's going to do better, because it's going to have less hallucinations. It's going to have less irrelevant things going on there. It's going to be tuned for those specific cases. And I'm seeing people working on a lot of these, right? They're kind of almost putting wrappers around ChatGPT or others and saying like, hey, use this. And that's maybe just the version 1.1 of these, right? But down the road, I think there's going to be truly kind of like case or industry specific models that are going to go so much further than these general models are going today. To answer your question, the challenge that I see is people aren't using them as tools; they're using them as the final answer, and that's where you kind of get into a lot of trouble. My wife's a school teacher, and she deals with this at school, where students are sometimes using AI generated answers and not using it as a tool, but using it as the answer. And it's not right. So you get a lot of this over reliance, because in some instances it does such a great job. You expect it to do such a great job everywhere, and it doesn't quite live up to that yet.
Yeah. I think it'll be interesting to see where it goes. One of the issues I've seen, before AI became a central issue was, I thought the biggest problem for society is really knowing what's going on the ground. With social media, you have so much information coming from different perspectives. And so people don't really go to a trusted resource anymore. They go to, Twitter or Facebook or different platforms, and they get whatever stream of information that they want. And there's, we've gone from a handful of news sources to thousands, and anyone can be a news source now. And so people just tend to lock onto the ones they want. And now you have AI that's generating stuff based off of those resources. And so really for the layperson to understand what is really going on is I think that's a problem that we're going to start facing more and more.
100% agree with you. And if I may, I think that might even, there's one other piece that perhaps makes it even a multiplier, is because people rely so heavily on social media, and social media algorithms are built by design to give you more of what you like to see.
Mm-hmm.
Your world starts getting smaller and smaller and smaller to the things that you know and believe to be true. And anything outside of that, you may never even see an opposing view. Right. So it takes these views and makes them feel like reality, as opposed to one out of several views, because that gets reinforced to you multiple times, because it's your social media and the algorithms are tuned to give you more of what you'd like to see. So it just gives you more of the same. It kind of keeps you hooked, gives you more of the same. You don't even realize that there's other viewpoints or other worldviews outside of that, right? So you kind of get more and more of the same. And then it gets exactly to your point. It takes that content and generates new content out of that, which just reinforces that same viewpoint even more, right? And there's other people that are getting a different viewpoint, and there's people are getting a different viewpoint and a different viewpoint. So people's fact base is no longer a common fact base. Everybody kind of has their own set of facts at this point, and
Right.
only getting worse.
Yeah. Yeah. And I think, when you kind of go from, the virtual world, social media to the physical world, and someone you come across somebody that has a different fact base, that's where that confrontation, you used to be able to debate things civilly. And now people are a little bit afraid to do that, as far as sharing what their thoughts are. And so, yeah, I really can't say what the solution is, but it's really one of those issues that
Yeah,
it seems like it's accelerating rather than getting better.
there are instances where I see it getting better. There are instances where people are having the dialogue and saying, "Hey, this is not going anywhere if we keep doing this," right?
Mm-hmm.
That communication piece is really important. We need to understand where the other person is coming from. We need to understand their fact base and why did they reach this conclusion. Um, and is there a common goal here that we are trying to get to, right? So I do, probably not often enough, but I do sometimes see those conversations happening. And I think that skill set is going to become increasingly important, right? That
Mm-hmm.
skill set to be able to take disparate thoughts and have the conversation to, I'm going to say keep an open mind, but that seems really vague, but to kind of say, hey, I have this viewpoint, but maybe I need to understand that this is just one viewpoint. This doesn't make it right. Other people may have a different viewpoint.
Yeah. Example is, I have
Excuse me.
a friend from high school is completely at the opposite end of the political spectrum than I am. And I will see her postings on a regular basis. And I probably spend more time reading them than others. So I get more of those posts, and I don't
But that's an
comment on.
active decision, right? You have to actively choose to do that. And I think the more people that are willing to kind of just hear another viewpoint, I think that helps tremendously.
Yeah. And from my background, like, that's kind of I'll say wrong, but I won't comment on it. And in some ways, but I think one thing is to kind of understand why people think that. And you don't have to agree with all of it, but there's people have come to that viewpoint through some logic of their own, and trying to understand that, I think, is one of those things that,
and I'm a Ted Lasso fan, and this always reminds me of the scene at the bar with darts. Have you seen the show?
Yeah.
So it really goes back to be curious, not judgmental, right?
Mm-hmm.
I think that's the best way to put it, is just because somebody has a different viewpoint or background or life situation or whatever, our natural reaction is to be judgmental. And I'm the same way.
Mm-hmm.
We all do that. I do that. You probably do that, right? It's easy. I think maybe that's what comes naturally to us. We have to actively step away from that. Try not to be judgmental, but instead be curious and try to understand, hey, where are they coming from? Like what experience has them in this situation or makes them feel this way? Maybe we try to understand that a little bit more.
Yeah, I think that's probably just a natural reaction, is to judge almost immediately.
And
And
everyone does it. I do
it's probably part of a survival instinct.
Yeah.
And whether I should engage with that person or not. But sometimes we'll see things that we judge negatively, that person just there may be a lot more context around it, why they're there. And, there's always like a backstory that they might be completely different under other circumstances. Samil, I have like one note here. It says ninja loans in Africa. Was it something we discussed about that during our previous call? I guess I lost you.
I don't remember that. It's been a while since we last talked. We may have talked about ninja loans because I know there were a lot of poor decisions made regarding how mortgages were given out leading up to 2008 crash.
Mm-hmm.
And I think maybe what we were talking about was that there were some similar decisions being made in the VC community.
Okay.
I'm going to say leading maybe up to 2021 with a lot of the MGAs or insurtechs, sometimes referred as generation one of the insurtechs, because they were similar idea where there was not a lot of analysis done to see whether this is a good market, is this profitable, are the premiums reasonable, are they going to make money, can they grow. There was this flurry of investments that happened because this MGA space was kind of hot back then, and so a lot of money was poured in. without sufficient background analysis, due diligence, etc. And then the pendulum, I think, swung the other way, where over the last few years, it's been almost impossible to get investments into this space because a lot of the investors look at what happened with those companies in that generation one and say, well, we don't want results like that, so we're not going to invest in this space, as opposed to finding that middle ground, which is, hey, let's actually examine each opportunity on its own merit and not put a blanket around this. I'm seeing this. I'll give you one example. One of the companies I'm working with right now is kind of creating this really cool product for student transportation insurance. It technically falls under a commercial auto line of business. Commercial auto has done terribly as a line of business at the industry level over the last 10 years. So everybody just kind of says, no, we don't want commercial auto. Staying away from that. If you so this is where I went in, did a lot of analysis and dug in to understand, well, how is it sustained to be that bad for so long? That's not that it shouldn't be. And I can tell you that now, why? Because I've done so much research to understand this, and it also gives me the opportunity to say there is so much low hanging fruit in this space right now. We can very easily go in and pick out the winners because it's just ripe for disruption. So in my mind, this is kind of taken what was considered to be sidelined and really not a great space. Instead, there's so much opportunity in this space right now, and I'm working on multiple projects there that allow us to take commercial auto risks and just write them really, really profitably, because the market has done such a poor job and just not put enough resources into this space, where this is maybe where that whole ninja loans, the idea was not to stop writing mortgages entirely, right? That's kind of what the industry has done, but instead say, hey, let's actually look at each individual application and see, is this worth writing? Like, what makes this a good risk versus a bad risk? And I think people need to kind of do a similar thing in this insurance space, and don't just write off an entire line of business or entire space, but it's to say, hey, how can you differentiate? How can you make sure that this particular book you're going to write or this particular program has the right measure of profitability in it? How do you make sure it is going to grow? How do you kind of look at this? And that's where we're seeing so much opportunity, is to kind of take these spaces and say, here's how this one's going to work. Don't worry about the rest of the space. We're not trying to fix the entire industry. We have a great solution for this space. Let's run with this one. So that's kind of how I see the industry evolving.
So is that kind of like a regular thing within the insurance industry where, if you're a large carrier, you have multiple lines of insurance. One insurance line gets difficult to quantify the risk, and you just kind of shift resources over to the other lines that are more profitable. And it kind of, multiple carriers do that. There's this one area that kind of atrophies, and then you have, which gets identified as an opportunity for innovation. It's not going to necessarily be the large carriers that do it. It's going to be someone coming in from that's more nimble, that comes up with a different solution. And then do the major carriers kind of move back in at that point, or what do
After
you see?
several years, because what happens is, I've spent my time at some large carriers, the decisions are not made by people who actually know what's going on. The decisions are made to appease the shareholders, right? So that's kind of how a lot of the decisions are made at large insurance companies. So it misses the ground truth. Instead, it's, hey, this one line performed poorly last year. We need to tell something to the shareholders. We're going to tell them we're going to stop writing that, and that's going to help with the making them feel better, because we found the problem and we fixed it. We stopped writing it, we fixed it, right? So yes, I 100% agree with you. I don't see big carriers kind of making those moves. What I do see is small emerging players coming in saying, like, this is a ridiculous problem. Like, we can fix this. Like, here's a solution. Let's actually go at it. That's what I am doing with this one student transportation provider and a whole bunch of other similar areas where the market is sometimes saying, we're not going to touch this. We look at this and say, that's where the opportunity is. There's so much money to be made here because nobody's touching this. There's not going to be a lot of competition. We're going to make so much money over the next 5, 7, 10 years before people start looking at this again and saying, hey, we can make money here, right? Workers' comp is a perfect example of this. For the longest time, these 90s people were not touching workers' comp. And then suddenly we're like, I was about to curse. There's so much money to be made here. We can actually write this profitably. This same thing happens it's happened with property insurance, and happens with like, basically you can take any line of business and find ways to make it profitable if you actually do the analysis and think about it. So that's what is required is kind of digging that layer deep and not just kind of throwing the baby out with the bathwater, but instead looking at every problem and saying, how do we fix this, and actually going after that.
Yeah, and I guess one thing is like, the small companies that come in and provide a new insurance product or new way of quantifying risk to offer it. Do they have challenges as far as getting that to market to the consumers? Because I mean, the reality is if someone's buying insurance, look, probably the average insurance buyer just looks at what it covers, maybe, and then what's the price, and then pulls the trigger or they don't. How do
Yeah,
they differentiate themselves?
it depends. So if you are coming up with a new solution in an existing space that is tough, the distribution is usually not the problem because the channels already exist for distribution, right? There are thousands of agents out there that'll write some of these policies, and sometimes it's a matter of kind of saying, hey, they'll tell you, we're really struggling to write business in this space, and you say, hey, I have a solution for you. They'll try it out, and if it works, you're golden. They'll bring all the business in the world to you. They'll transfer all books over to you, right? So you can kind of get there pretty quick.
Mhm.
Where you do run into that, and this is where what I've experienced is when we're creating a brand new product itself. So I don't want to name names because these are my clients' information, but
Sure.
I've created some completely brand new insurance products like these don't exist in the market. That's where that distribution challenge exists, because we can go talk to brokers and they're like, I don't even understand what you're covering, right? And so that's where we have to sit down with them, have the conversation. Let me tell you what this is. And a lot of times there's this idea of embedded insurance that's been around for it's probably gain a lot of shelf space, maybe the last 5 or 7 years, where you're not just going out to the broad market, you're kind of finding related products and embedding the insurance solution there. So, travel insurance being embedded
Sure.
within your airline website, right? That's that kind of example. So I think that's what works for these new lines, new products, is finding an adjacent space and going there and saying, hey, can we partner with you to sell this? Because the people are already there. They're looking at this space, and that's where you kind of say, hey, by the way, here's how you can find an insurance solution for this. You already have a target market. They're sophisticated buyers. They understand what they're doing, and that's kind of how we're trying to solve that distribution point.
Yeah, you definitely see embedded insurance in just a lot of different places, like just buying something from the store, like it's
Yep.
over a few $100. They're like, you want to have insurance with it? And I usually say no, because I'll never remember that I have that policy if something happens.
That's right. That's right.
Well, Samil, I really appreciate you sitting down with us and sharing your insight. And we kind of went from insurance to venture capital to a little bit of philosophy. So thank you for having the time and sharing your thoughts with us.
Thank you for having me, John. I really appreciate it. I love having conversations like this. There's so much, in my mind, exciting stuff happening in the insurance world. Happy to share it.
Yep. Thank you again, Samil.
Take care.